because we have a very low initial trend here, there are two choices. And the first one could essentially be, I won't trade this particular pattern. There's plenty of other patterns. I'll go find a pattern that's occurring in a better suited market cycle, in a better suited market environment. That's one choice. Non-trending market with just this one bar, trending pattern alert, mismatch, you could basically move on. Another choice, and this would be for more experienced traders who are a little bit more comfortable with chart pattern trading and are willing to take a little bit more an aggressive approach. If the trend is indeed fading, and I have a rising pattern, which could be moving into a sideways market cycle, an aggressive approach, and again, I cannot say it enough, this is aggressive. An aggressive approach would be, okay, to do one of two things. And let's talk about what you could do, because these are options, they're valid options, but they're not necessarily right for everybody. So if I were to extend out this line here, like so, this is basically resistance, correct? That top line, that green line that I just extended out, that's basically resistance, correct? So as we're approaching this resistance, I can expect pressure, selling pressure at this level. I could do what's called a fade at that level. In other words, I could wait for prices to exhaust and short at this level. Again, aggressive. Why? This is all predicated upon this low initial trend reading. I'm not expecting a continuation because the trend is fading. The other choice that I have is to notice that I have a support level that could be a tool that I could use to gauge any kind of weakness. Okay, so if I were to extend out this level here, like that, okay, of course prices could exhaust at the uptrend line. There's no doubt about that. But if I can find prices weakening below this 3,600 level, see, this adds a whole new element to this trade. We can't ignore price. This 3,600 level adds a whole new element to this trade. If I can break the uptrend line and 3,600, this double zero, the major psychological level, I could very well see follow through to the downside as both these prices are broken, because the trend again is low. But just because the trend is low does not mean we're going to have momentum to the downside. Again, that's why both these trades are a little bit more aggressive. In fact, if anything, the trade off resistance is probably slightly less aggressive than this expectation for a break to the downside. This downside break really becomes valid mainly because if we break 3,600 on the Euro-US dollar, there's a good likelihood that we'll see a little bit of follow through lower after breaking the double zero. Okay, now all this was determined by what? It started with an assessment of a very low trending environment. Okay, let's take a look at another pattern.